Hello everyone, welcome to the ESS BIZTOOLS Delivery Advisory Services. Today I'm going to talk to you about Predictive Accounting and Chief Financial Officer services that are included within ESS BIZTOOLS. This particular product package also has a direct involvement with Plan Guru, a well-known American company that specialise in the preparation of software relating to budgets, cash flow forecasts and projected balance sheets. And the package which we offer to our subscribers in this category also comes with a special training program that is delivered by Paul Barnaby, a fellow of the Institute of Chartered Accountants. And Paul's with me today. How are you today, Paul?
I'm just great. Thanks, Peter. Yep.
Well, we'll get started now. Welcome everyone to the Delivering Advisory Services. We're looking at Predictive Accounting and Chief Financial Officer Services. Paul Barnaby's joined me and we've talked to you about that. So Paul, I might just stop there so you can say g'day.
Oh yes, g'day Peter. I'm pleased to join you today to talk about a topic dear to yours and my heart.
Very much so. Okay, so we'll just go back to share the screen and so Paul, I think where predictive accounting starts is with the business plan, because this documents the leadership team's vision for the business. But the business plan, I think, should be coordinated by the accountants that we're directly talking to in these webinars, because I wouldn't leave a client just to do the business plan. There's some clients are more capable of doing this activity than others, of course, but you need to be a liaison. I've mentioned there also that certain aspects of the overall document might not be prepared by the accountant. That could include the market report, a marketing plan. So they need to factor that in, because some of that's obviously going to have an impact on the financial forecasts.
Yep.
So you would agree on that?
You're absolutely right on that, Peter. And I have seen business plans brought to me to prepare a budget from that are literally written on the back of an envelope.
Oh, yeah, we've all seen that.
And it can happen, but you're absolutely right. The accountant does need to be involved, and sometimes you will want an external consultant. You're absolutely right about that as well, because nothing replaces getting that plan properly put together, because the business owner is going to be judged by his own plan.
That's right.
If it succeeds or does not succeed, people will be looking for reasons why, and therefore it's got to be a product of some high quality.
And it's the leadership team of the business that's got the prime responsibility to implement all this. So they need to be involved. But hopefully, if the accountant is performing the chief financial officer's role, which hopefully he is as part of this whole process, he or she will be involved partially involved anyhow in the delivery of the, at least the financial reports each month, the comparisons back to the budget. We're going to talk about that a bit more in a moment.
Absolutely.
Okay, so we'll just go back to the slide. And I've listed there, it's important to identify the key business targets that have been agreed to by the leadership team. So the business plan is not something the accountant should just go away and write in isolation. It needs to have that input of the brains that are running the business, but with the accountant having some financial input into that whole thinking.
Absolutely right. I remember very early in my career, I was actually an accountant in business at the time, and I fell over that particular trip and didn't involve a very important staff member in the budget preparation, and he didn't like me at all. Yeah. And it took an apology from me when I realised the mistake I'd made. You must involve your client or company with the preparation of that business plan and the associated budget.
Okay, so Predictive accounting. You and I have done a lot of work, and you've devoted 25 years of your life in this whole area. But I think the best way to describe predictive accounting to an accountant is it's the financial interpretation of what's in the business plan. At one stage in my career, I was a consultant for a federal government program called COMET, Commercialising Emerging Technology. Now, I had to find consultants to prepare the work. It wasn't my role to prepare things, but I had one particular situation in an area I won't name where it was, but the client had got a consultant to prepare a business plan, and he also had someone else did the budgets and cash flows. And I read them, and they could have been talking about two different things. In fact, I think they were. and I rang the guy who'd done the budgets and the cash flows and said, this has got no bearing on what's in the business plan. He said, I think it's wrong. I said, hey, mate, that's not your decision. We've got a business plan. We've got to have the financial forecasts that are the financial interpretation of what was in the plan.
Absolutely. Mm-hmm.
So, Paul, I've listed here that what we're looking for, and you're the expert in this, is the individual budgets for each business activity. I prefer the individual budgets for each activity rather than a consolidated budget. We can get the Plain Guru system will give us a consolidated forecast at the end, won't it?
Absolutely.
But by having that individual budget for each business unit, and it doesn't matter if a business has got 4 or 5 of them or 205, they're going to be able to sheet home individual responsibility for the management of that activity because they've got an actual budget, and then they can match it with an actual profit and loss account.
Yeah, absolutely right, Peter. And I'll go further than that. You actually, in predictive accounting, get down to the lowest level of detail for which information is available. So it's not just what is the sales of this company or division or branch or whatever it happens to be. What are the sales going to be? How are the sales going to be built? If we sell widgets, how many widgets are we going to sell? What price will we get sold at? Who will we sell them to? What terms will we sell them on? When we buy them, what terms are we buying? Those are all drivers, what I call drivers, to build that detail that can accompany that lowest level. It might be a branch, it might be a division, as you will say. And then you build up your consolidation, and you've got to have tools that can do that.
That's right. So the key drivers that you just referred to, I've put some on the screen so that our accountants who are looking at this get an understanding of what we're talking about. Inventory of raw materials, those widgets you just spoke about could come out of there, the labour manning, the labour budget, completed stock, debtors, work in progress, creditors, capital expenditure, research and development if they're doing it, and cash flow forecasts. You've probably got some others.
Well, there's all the individual income lines and all of the individual cost of sales lines. They can be different one by one. There's the overheads, of course. How are they? The important thing to sheet home here is, for too often when we were taught budgeting as students, we were told take last year and add a bit for next year. Well, waste of time. Waste of time.
And we've got to categorically reject that, haven't we? We
do.
As a profession, we should be ashamed that did happen in the past, and we're probably all been guilty of it.
Yeah, and not that long ago either.
That's not what we're looking for.
No.
So that if this information is going to help a business person run their business, it's got to be prepared as accurately as possible.
Correct.
Okay, so we could then move on into one of the last documents that's prepared, Paul, is the projected balance sheet. Now, I like the projected balance sheets, looking at 3, 5, 7 years hence, because I think it gives the accountant the role to play the storyteller role, to be able to sit down and say to their clients, well, you've got 6 businesses and we've outlined those. You were talking about doing some major research and development and then patenting your new inventions worldwide, and we've got costs for that. And you're going to open a new factory, and you're looking to do some crowdsource funding, equity raising, and allocating a percentage of your company to those people. And I know already you're starting to wake up at 3 o'clock in a cold sweat saying, what's my business going to look like? It gives you, the accountant, as the storyteller, the opportunity to be able to clearly outline that to the client. so they have a far better idea of what all this is going to mean in 3, 4 or 5 years' time. Do you want to add to that?
Yes, exactly right, Peter. It's not only the preparation of the balance sheets, but that gives the client the indication of their investment level that will be in 3 or 5 years' time. It also indicates the growth in profit. But the important third aspect of predictive accounting from the profit and loss and balance sheet is cash flow.
Yes.
And all three are linked. One affects the other, affects the other, affects the other. And this is the other thing that, as an accountant, took me a little while to get to grips with, because when I first started budgeting and forecasting, we didn't have tools. We only had the good old spreadsheet. And I can tell you that was a nightmare to prepare the sort of detail that I wanted to put together in those days. So it's that three-way report that is important. But yes, the balance sheet is a key one of those.
Okay, so just a couple of other items, and Paul, you're then going to talk to us about the training, how people can become proficient to use this material. Rolling forecasts, they're a component of the Plan Guru software to enable fine-tuning to occur during the year.
Absolutely. So, and Peter, sometimes I have felt quite embarrassed when some accountants that I've spoken to don't know the difference between a budget and a forecast. And there is a very essential difference. The forecast is that mixture of actual performance to date plus the remaining budget, whether or not updated for modern conditions, because we should always hang on to the budget, put it on a shelf. These days, electronic. We put it on an electronic shelf so we can pull it down and look at it, but we must be able to constantly update it. Bring in the actuals to date, but then look forward and say, how much is going to change now that we know what we know? And that's a true rolling forecast.
And this is part of this overall concept that I know you're trying to encourage accountants to look at, and at ESS BIZTOOLS, I'm definitely, that our role is not just to come in at the end of the year and put together some fancy accounts. We need to be involved so that the client is getting the benefit week by week, but most definitely month by month. And this is where the rolling forecasts come in. If there's been a change or something's happened, well, we need to be identifying that as soon as possible and showing the client what the effect of that's going to be.
Absolutely. It's part of an ongoing relationship, which is so important for the client.
And what it is, I think, is, and both you and I have spent time in private enterprise at the coalface, away from accounting, as accountants, obviously, in private enterprises. You don't just look at your annual accounts at the end of the year, do you? When you're in an enterprise, you're looking at weekly results, and then most definitely monthly results, comparing them to budgets and reporting to a board of directors or a board of advice. I think that's the role that I really envisage. I don't think, I know. That's the role that I think accountants who have fair income about supplying chief financial officer services need to be making sure their team's able to deliver. And that means they really need to be able to use the software, the Plan Guru software, to get the results and to get the associated key performance indicators and other information that the client needs or the leadership team needs.
Yep. You'll remember the advent of GST. GST did the accounting profession a big favour, but it gave them a kick in the backside to tell them that, hey, you need to prepare financial statements more than once a year.
That's right. That's right. But unfortunately, I think that's, now it might be 4 times a year, but I think it's the opportunity to really delve in and take it all a step further, I suppose, is what we're trying to encourage the people look at.
Yeah. And you're quite right about that, because what it does, it relates the financial statements numbers, and numbers are boring, but it relates those numbers to actual events in the business. and the client can say, oh, yeah, that's why that happened, or that's why that was up, or that's why that was down. And they relate it to real things. And that was the problem before. There wasn't enough frequency of reporting, let alone meeting and discussing.
Okay, Paul. So what I now want to just raise with you and give you is the developing the skills of a certified predictive accountant. And so you're the training manager, training director for the Plan Guru software in Australasia. So, Paul, do you want to just give us an overview of how you would go about that and what the overall concept?
Okay, so we've talked about predictive accounting and why we do it, and how, to some extent, we've talked about how we do it. But it does require a commitment to yes, to training. And it's not training about software that we're talking about. It's talking about training of a process. And that process is becoming a virtual CFO for your client. And so you're going to say, well, how do you do that? Well, is it a small step and a small change in the practice, or is it one huge big leap, as the saying, moon landing saying goes? I can tell you it is a huge leap for most, and it was for me when I did it. Because if you're going to do it successfully, you must delegate all compliance and tax work. And I don't mean out of your practice. I mean within the practice. Obviously, you will still look after the annual tax office and other bodies' requirements. Obviously, you'll file tax returns. Obviously, you'll do the BAS and what have you. But what you need to do is to tell your clients what they're going to receive. And if you're brave, and you don't need to start this on day one, you can do it once your training's built up, tell them what they're going to receive. Tell them you're going to be a virtual CFO. And there'll be no argument. Don't just do tax work for that client, because they need those services that only you as a predictive accountant can deliver. So that's the first big point that I want to make, Peter. That you must just make a commitment to doing that and focus on it. By all means, make your client think that you're doing all the tax work. If he rings up and asks a tax question, get him a tax answer. If you don't know it straight away, ring him back. And that's okay. He'll know that. So you just need to concentrate on those virtual CFO areas. And you need to involve your client with each step, as we were saying earlier. You need to train your appropriate people, and I can help you. I can help you with all of this. So what does it involve? Well, Peter has touched on a number of them, but I'll just repeat a couple because I think it bears repeating. One is the business plan. Well, we don't need to dwell on that. We've given that a good going. Monthly variance reports, comparing actual with budget as soon as the actuals are available. Then a monthly review meeting, preferably in your client's premises. Now, you're going to say, post-COVID, why are we meeting at the client's premises? I'll tell you why, because that's where they feel relaxed. They don't relax in your office, and they really don't even relax online. So go see them. You'll enjoy it as well. Look at updating the strategies as you go. Don't just leave it as an annual thing. And when you do an update, give the client a ring and say, look, I'll come and see you again. There'll be no extra charge for that, for the normal charge. And the client's saying, wow, oh, this is pretty good. And that brings up one other thing, fixed fees. Make sure that you do your CFO services on fixed fees. Hourly rates, I was once asked if the client could insist on an hourly rate. I said, no, you cannot. And they looked at me as though I was mad. I said, you're not buying an hour of time, my time. You're buying 30 years of my experience. How insulting would that be to try and put that into an hourly fee? And the client looked at me understandingly, and I never had a problem after that. So there's a couple of thoughts. Just one other, perhaps, little point. So you've decided you'll get make the leap. You're going to prepare budgets and forecasts for your clients. What do you do next? You reach for Excel, right? Wrong. You don't reach for Excel. Excel is a great tool, and once upon a time, that was the only thing we ever had. But it was never built for predictive accounting. Today, it's not built for predictive accounting. And would you, as an accountant, if you were asked, recommend Excel instead of Xero or MyOb or QuickBooks or whatever it is that you like to when you ask that question? Well, of course you wouldn't. So why would you use it for predictive accounting? There are a number of tools out there, and you just got, it's up to you to choose the best. I support PlanGuru and continue to do so, because when you match the huge number of benefits it gives you and the huge number of tools and clever things that it does, and then compare that to its cost, it wins every time. So, Peter, there's just a few of my thoughts on what that process is all about. It's just so important that you get into it and do it.
Okay, so that's our overview of the business activities relative to predictive accounting. It's obviously linked to other components, as we've said, like the business plan. And it does really allow you to be the storyteller of what the future projections are. And what you're doing is not being an historian like we've, as a profession, we've been in the past, but being part of the leadership team in predicting the future and guiding your client through it. So if you've got any questions on any other matters relative to the budgeting and cash flow forecasts, projected balance sheets component within ESS BIZTOOLS, please contact me. Yes,
I've
Paul.
got just one more thing to add, Peter, which I didn't cover off in the short time just now, and that is that when we do the training, you can enroll and become a CPA. Now, that's not the CPA that we all know about. It stands for Certified Predictive Accountant. Those words are actually trademarked and are in reality, and the training that we do to show you how to become a virtual CFO, it does include, subject to certain tests, obviously, and exams, the certification as a CPA, Certified Predictive Accountant. And that's how hands-on the training is. It's always one-on-one. You're never grouped with other firms. It's always me, as it happens, on you and your individual firm. So any individual questions that are private to your firm, they're going to stay that way, because I do it one-on-one.
Okay. Righto then, Paul. Thank you very much for your contribution to this video today. And
No problem.
I'll catch you next time we get together. Thank you.
Right.
Goodbye.